What's up, everyone? We had a wild week last week. I think it's going as expected. I think the tariffs are really neither here nor there, even though it's all anybody can talk about. A little bit of that is just myopia. I'm going to just start with some general comments, and then we can go look at some stocks. There's a lot of things to think about here. Obviously, we haven't had a real trade war in forever. I think that there is this question about whether the deficit rubber would have to hit the road. And I think, that rubber is hitting pretty clearly. So ultimately, one of the ways to think about a $27 trillion deficit is in a confiscatory way, which obviously I don't think anybody wants to think about it that way. But let's say you had a $27 trillion deficit and you wanted to solve that because every year it seems to be going up and there's no way to solve it through politics as usual. There's entitlements that are hard to break. There's tax revenue that's hard to increase. It's already fairly high. How do we solve this problem? Well, we have these unilateral tariffs that are placed on us, but we don't really have them on others. Although, regardless of what the real story is, we still need to close that $27 trillion gap. So one of the ways that you could do that is to look at all the assets in the world, which is probably pretty good common ground to start from. If you start with that, you can work your way backwards. So there's only $400 trillion of wealth, period. Okay? So there's 27 trillion we need and 400, period. Now we could grow into that somehow, but confiscating the assets is a little simpler. And if you think about that $400 trillion of assets, how much of it do we own and how much of it do we sort of have auspices over? I think we own, or household wealth is around 100 trillion, and the auspices probably cast a shadow. The US sort of cast a shadow over, another 100 or 200 trillion. So the theory is, let's say the number's 300 trillion. We basically have to take 10% of that and pay off the deficit with it. And the way you can take it is you can do it in a wild, aggressive, hostile way, which nobody wants to see. You could raise taxes, dramatically, or you could just simply, tariff. And I think that was the solution that was chosen to solve the fiscal problems of the country. And so if we tariff that $300 trillion base of assets that we have sort of control over, we can roughly, get a sense for, doing that, say 1% a year for 10 years, and our deficit would be closed, assuming we can get to budget neutrality in the meantime. So that's sort of one way to do it. Another way to do it is to grow your way out of it. If the 400 trillion is growing, you can, tariffs are, basically a form of tax. So there's only two ways out of it, which is lower your spending or raise your revenue. And tariffs is just sort of a modified form of taxation. Instead of taxing income, you're taxing sort of trade. But in any event, the other way is to grow the base. If we go from 400 trillion to 800 trillion, sort of half your problem is solved that way. And I feel like one way to do that is through AI. Another way is through all kinds of other things, just simply growth. And politicians of the past have been willing to borrow from the future and trust that growth is going to outstrip that deficit. Some of the swamp creatures I know, some of the deep state people that I have had the pleasure of being friends with, their goal is just to make sure that the rate of borrowing is outstripped by the rate of growth, and that eventually those two will cross, and that the spending that we take is an investment in essence on an investment in our people, like things like healthcare, entitlements like that, are in essence investments in future growth. That hasn't really played out that well. Growth seems to be driven by people like Elon Musk and Sam Altman more than it seems to be triggered by the average person being a little healthier through Medicare and Medicaid. So in any event, that's sort of what I think is going on there. I don't think it matters that much for U.S. equities. And you might say, Martin, well, everyone's talking about it. How could it not matter? Are you stupid? And I'd say, no, you're stupid. The basic premise here is that if you arrange a bunch of plywood, dry wood, I'm not an expert in forestry, but something very combustible, and you put it on the floor and you say, well, you know, there's matches here, there's gasoline there, there's friction over here, and you're surprised that a fire starts. You know, you shouldn't be surprised. The reality is that the market, after being up 20% in 2 years in a row, which is, you know, roughly 40%, there's sort of a bunch of dry, you know, combustible wood there ready for a fire, and anyone striking a match will set ablaze, you know, a very big conflagration. And so, you know, the tariffs did that, and there's no doubt about that. But, you know, we have had this blaze, these plywood arranged for quite some time. We arranged some with quantum computing. We arranged some with meme coins. We arranged some with MicroStrategy. We arranged some even with good companies like Palantir. We arranged some all across the board. And so, you know, by sort of arranging that plywood and stacking it high and making sure the room was super dry and there was lots of matches lying around, you know, nobody should be surprised that there's a fire. Nevertheless, the news has to do something and the market has to do something, and that's fine. And a little panic can be very healthy. So, you know, here we are. And again, the mission remains the same: buy good stocks, short bad ones, and you will win. I think we're winning. Do you feel like you're winning? So yeah, we'll log into the 30K account in a second. You know, pretty nice opportunity actually to short IonQ and D-Wave and Rigetti. So I really do want to log into that account. Our NVIDIA rebounded a little bit. So we bought that at 93 on Friday. And we even bought HIMS. So I might want to sell out of those and short. Oh, okay. I have so many investment accounts. I'm not sure which to log into. Give me a minute. Yeah, I mean, these stocks were down last week. So a little rally is not unexpected. You see there's some rally in a bunch of things. SPYs are up now, 30 basis points, kind of incredible. Let me see here. Yeah, that's loading. So like one example, I don't know if you guys can see the screen well, but let's look at some S&P 500 stocks. So here's Microsoft, $359. I do EM, this is a new function, and this is my favorite because on Bloomberg, the legacy system that we're replacing, because they banned us. EM is probably my number one used function, and you guys will, you know, call me not a purist for doing this, but this is just basically consensus estimates. And so we have FactSet consensus estimates, which we double check. They're actually the same as the Bloomberg estimates. So you get the same estimates actually for free, technically, right now on Godel terminal that Bloomberg has, which Bloomberg's pretty expensive. So anyway, this is the function I use the most on Bloomberg when I used Bloomberg before they banned me and made me their worst enemy. And in fact, it's sort of laid out pretty similarly to the Bloomberg function, and it does need to be prettied up a bit. These columns are a little too wide. I told my cosmetician, I think they call them front-end people now. But in any event, you can see here, and these should be changed a little bit as well. The formatting should be 0.0x if they're listening. But you can see that Microsoft is at 27 times fiscal 25 and 24 times fiscal 26, which isn't that bad because it is a decently growing company. Let's check Google. So Goog, $150 stock, 16 times. I don't know if you guys see that. 16 and a half times fiscal 25 and 15 times fiscal 26. And you can click revenue here. So you can look at sales, incredible sales, 400 billion in revenue. You can click EBITDA, you can click net income, any of these cash flow, which we love to see. All those things you can compare and look at individual quarters. And basically when you make your model or you download my model or you don't even look at a model, you can use these to compare the individual quarters and say, wait a second, Wall Street thinks it's going to be this much. Why am I so different from Wall Street? And I think that's kind of neat. Let's look at Eli Lilly, which is the biggest drug company. It's 31 times and then 25 times. Let's look at Merck. So Merck is a funny one because Merck has some debt, and it's 9 times earnings and 8 times 2026. The problem with Merck is that eventually 𝗕𝗀𝗃𝗧𝗏 goes off patent, and that's a huge part of their earnings, probably half the company. So the earnings multiple will actually go up over time as the earnings go down. The E and the PE is not so great. So again, I'm not a huge fan of PE ratios because I think they encourage laziness. We will make sure we get 27, 28, 29 estimates as well. And perhaps that'll be more of a paid feature. But in any event, I think that the Merck situation is very unique. I looked at Merck very closely and I didn't think it was that great. PayPal is one I want to dig into. I think it could be a really good long, trading around 10 times earnings. Not much growth over at PayPal, but 10 times earnings, 10 times earnings. Let's look at a few others. How about Amazon? 27 times, 22 times. Let's see. How about ExxonMobil? I never look at energy. 14 times, 12 times. That's not bad. JP Morgan, 11 times, 10 times. So it's really just the Mag 7 that's all messed up, right? How about NVIDIA? NVIDIA is 32 times and 20 times. That's actually not bad for the greatest technology company on the planet. Not bad at all. What else? Procter & Gamble. 23 times, 22 times. No growth there. Sorry, I have no blinds here, so I don't like streaming from here because the sun's literally in my eyes. Costco is 51 times and 46 times. Again, for very limited growth. So that, let's click on revenue growth and see what we're working with here. But the revenue growth is 8% and 7%. If they meet those numbers, right? They may not meet those numbers. But, it's, that's pretty good growth for a retailer. But I'm not sure it merits 50 times earnings. Walmart conclusively has no growth, last I checked, and 34 times and 32 times. Sales closer to single digit, inflationary levels. How about like Regeneron or Gilead? 13 times, 12 times for Regeneron, Gilead, sort of same category. Gilead's really attractive because they're coming out with this basically a cure for HIV. If you've been following Gilead for 25 years, like I have, it's a company that's basically solely dedicated to HIV. And, they've tried to sort of get diversified, but they've also not wanted to abandon their strength in HIV. So they have routinely had the best cocktail HIV sort of pill. And, they've had once daily pills for a really long time, about 15, 20 years. And those once daily pills have changed the game for HIV. But now they're moving, and it's a bit of a risky move, and we'll see what happens, but they're moving to an injection. And the injection is twice a year. And you don't have to remember to take your pill. And the pill is problematic because if you have HIV and you forget to take your pill for even as little as a few days, the HIV will come back and could even mutate, which you don't want. So the pill is not only, the shot, the new 𝗦𝗪𝗔𝗏, their new product, I think it could be one of the best-selling drugs of all time, possibly 𝗕𝗀𝗃𝗧𝗏. And the reason for that is a few reasons. You could actually, for the first time, eliminate HIV completely. And why do I say that? Well, if you take the drug prophylactically, so you take the shot and you're HIV negative, and you take the shot, you're basically covered for 6 months, if that makes sense. So, there's a really good shot here, no pun intended, where you can actually use this product as a vaccine as well as a treatment. And that's something that's never really existed before. There was PrEP, but PrEP had this problem, like it was sort of like the morning after pill, where you sort of had to remember to have it and time it and all this. With 𝗦𝗪𝗏, you do a twice yearly shot, perhaps in the future it'd be even less frequent. And And I think that's something that the HIV community is going to adopt very quickly. It's HIV in general, it's a bit of an unusual thing. It's a very specific kind of market, but it's something interesting. The economic aspects of the real HIV problem, I mean, the problem's real everywhere, but the problem in Africa, that dynamic is very different. Now, again, if Bill Gates would be generous and give Gilead $50 billion, then, I'm sure we could solve the HIV problem in Africa. But some of the problems in Africa include a resistance to taking medication regardless. So there's a lot of stigma about taking medicine in Africa that's a little unusual. Now, maybe that's changing, maybe it's not, but I think there's some countries that would love to, in essence, inoculate their whole population. So in any event, it'll be interesting to see how this all plays out. But I think this is a, really compelling medicine that, again, could be one of the best-selling drugs of all time. So we'll see how that plays out. And for 10 times earning or 12 times earning, that's a pretty good deal. They also have a little bit of debt. So that 12, 13 is more like, 14, 15. So in any event, there's a quick view of the market. We'll have an Excel plugin and an API and everything else. I actually am in charge of making the Excel plugin, and oh man, Microsoft does not make making plugins very easy. Yeah, it's a sort of a porphyrin disease. The porphyrin system is very interesting. Yeah, I think Sarepta is a steal. I just, this certainly the tariffs have nothing to do with Sarepta. It's half off in the last month. It's a falling knife, but I would have no problem making this one of my biggest positions. Again, I use EM as a crutch. Look at next year's earnings. It's trading at 4 times earnings if they make that number. I think they might beat that number. And the year after, it could be trading 1 or 2 times earnings. There's no diseases that are low-hanging fruit for AI, unfortunately, no. You can see how a woman decorates a house versus a man. My place is a dungeon. This place is very nice. But I think they'll merge a bit because, I don't know, there's a lot. I mean, PayPal looks really good. EPP is the vampire disease, erythropoietic protoporphyria. I love saying long disease names. Focal segmental glomerulosclerosis. What supply chain feature do you want me to look at? Yeah, Amex, IVVD, there's so many. There's a lot of longs. This is my girl's crib. I'm gonna go sneak and go find her purse. Go trade more Rigetti. Don't tell her. Where the money at? Where's the money? Babe, listen. I found the deed. I put my name on it because I love you. I took out a HELOC. Yeah, got a HELOC. I took the money. I put it in Robinhood. Feel me? I had a strategy. The strategy was working. I was up double. That's where the story ends. Sub-Q is not going to really help very much. Yeah, we'll try to make custom. We've talked about Python, Godel script, GQL. We'll figure it out. Yeah, the fake news thing was typical. I mean, in market times like this, like I said, it's the tinderbox. So any little thing. Now, of course, they denied the rumor and the market's still going up. So I think it tells you we probably get a little bit oversold temporarily, but I think we're going to have to still deal with the overvalued issue. And people are talking about stagflation. You're not going to buy Walmart or Costco at 40 and 50 times earnings in a stagflation environment. And certainly stagflation, that word doesn't sound good for tech either. So, think about some pharma longs. I think if you have no pharma in your portfolio, it might make sense to consider some pharma. Speaking of which, let's look at some pharma. So again, for like Lilly, the problem we have with Lilly is that, we're basically estimating, use CF to go to company filings and just hit 10K, and we've got Eli Lilly's 10K. The SEC website, too slow for me. I need to be able to do it in a couple of clicks, because if I have to do this all day, it better be a fast process. And if you want to go even faster, you just do FA. and you have all the financials there if you only want to look at the financials. Even with Bloomberg and even with my own system Godel, I still like to do my own source numbers. And if you've been an OG in the game, you know exactly why. It's still preferable, believe it or not. Sometimes what I do is I'll use the system, and then if the system's ever wrong, I'm shutting the system down because I need it to be right every single time. And if it's wrong once, I got a big problem. So, that's kind of the way these systems work, is that they'll be right. And then I noticed, like for Apple, Bloomberg excluded the one-time payment they made to the European Union from earnings. That's the way I would do it too. But other systems include the one-time earnings payment, because who are they to override the Apple income statement? What would you do? Do you include it or exclude it? It's supposed to be the official number, and the official number is that they paid the $2 billion out of the income statement. So how do you take it out of the income statement? So if you use Bloomberg, you're putting in one number. If you use Godel or some other systems, you're putting in another. Now again, I actually like that move, but it's also a question of policy. And you should be able to click, okay, well, I don't want that. I want the official number, I want the adjusted number, or whatever. So I still like to do my own, because I get to make those judgment calls myself and say, wait a second, this fine, maybe not fine, but this one-time payment, was that not actually one time? I think it's worth including. Just something to keep in mind as we hone our skills, investing skills, and think about what's one time and what isn't. With all these European fines, the European Union seems to be putting themselves through solvency by fining our American tech companies. It's sort of absurd. And Zuck reportedly asked the president, his new friend, for help on that. He said, we paid these guys a $2 billion fine every week for some random new thing. Oh, this month, well, technically, you did this. And, the competition union finds that this happened. And, it's just this like random decree from some foreign land. Now, they are doing business in the land. And when you do business in somebody's land, you do have to abide by their rules, but they certainly seem capricious and just, kind of whatever.